Dax White is the managing partner of the White Law Group, a national securities, fraud, securities, arbitration, and investor protection law firm with offices in Chicago, Illinois, and Vero Beach, Florida. The White Law Group has represented hundreds of investors in the FINRA arbitration claims against their brokerage firms, and through this show, Mr. White will shine a light on some of the tricks of the brokerage industry and provide valuable information for investors on how to successfully navigate the investor-financial advisor relationship.
Welcome, everyone. Thank you for joining us. My name is Dax White. You're with us on Wall Street versus Main Street, a different take on the investor show. In this show, you're not going to get any investment advice. I'm actually not a licensed professional in any way. I am a securities attorney who represents investors in claims against their brokerage firm. And the goal of the show is to sort of provide information to investors that I've picked up over the years of doing this, with the hopes of making that relationship between an investor and their broker a more productive one. We see the same types of claims over and over again, and frankly, there's a lot of information I wish investors had that would better protect them and even the playing field a little bit between investors and brokerage firms. So the goal here is to sort of pull back the curtain on Wall Street and shine a light on some of the tricks and tactics that they use to maximize profits at the expense of investors. And we're going to do that through a couple different ways. We'll take some questions. I'll have like a topic of the week each week where I'll discuss sort of what I think is really important at the time. We'll do some news, something that's relevant to what's going on in the markets right now and where I think maybe some bad financial advisors may try to take advantage of news. Give you an example. A year ago, or whenever it was that Facebook came out and did their IPO, it was pretty predictable, at least for a professional securities attorney, to see that you're going to have advisors that would take advantage of that frenzy. Everyone wanted to buy Facebook, and it was predictable you would see scams related to that. So we'll touch on things that are happening in the markets right now and give some advice on where we think maybe there might be some scammers targeting people based on that news. And then we'll bring on a guest each week, hopefully, to talk about various aspects of the brokerage industry, just to provide some more information for investors. So without further ado, let's jump right into some questions for now. Since this is actually our first show, these are going to be questions that I've come up with, things that I think might be relevant to some investors. But certainly, if there are listeners out there who have questions, please go to our website, wallstreetversusmainstreet.com, and you can send a question through that. Haley, why don't you give us that first question?
All right. The first question is, my broker recommended that I invest in a REIT, but I don't know what that is or whether it's a good idea.
Okay, thank you. The investment she's talking about is a REIT, R-E-I-T, Real Estate Investment Trust. And what a REIT is, it's similar to a mutual fund in one meaningful way. It has a lot of differences, but the main similarity is that it's like a basket of investments. So if you buy a mutual fund, you've got a fund manager who is providing you with a variety of investments that they've vetted to give you, in theory, less risk, because instead of buying just one investment, now you're buying stock in a variety of companies. And so that's the objective of mutual funds. And REITs operate in a similar way, in that you're by buying a REIT, you are buying into multiple real estate properties. So the diversification, or at least the theory behind what makes a REIT less risky than just buying real estate on your own, is as opposed to buying a rental property or an office building or something like that, by buying a REIT, you're actually buying an investment company that has already bought a number of real estate projects. And so in theory, you're reducing your risk in that way by having it spread out. Unfortunately, it doesn't always operate that way, but that's sort of what a REIT is it's a basket of real estate investments. There's two main types. There's a traded REIT, and then there's a non-traded REIT. The non-traded REITs are the ones that we see because of some problems in the way that the investment is structured. A traded REIT is bought and sold on the exchanges. They have ticker symbols, not unlike a mutual fund or a stock company. And so from a risk standpoint, if you bought or traded REIT, excuse me, or you're recommended to buy a traded REIT, you think it's a very safe investment based on the representations of your advisor. If you see a huge price decline there, and which triggers to you in your mind, my goodness, this isn't what I was expecting, you can go and sell that. And so from my standpoint, we don't see a lot of problems with traded REITs because generally speaking, clients would have a duty to mitigate their own damages. And so again, if your argument is my broker misrepresented the risks of the investment, then my first question is, and an intake is going to be, then why didn't you sell it when you saw that it was declining in value? A non-traded REIT is very different. And the reason that we see problems with non-traded REITs is that they are completely illiquid. They are put together by a real estate sponsor who puts together the investment, sold through brokerage firms, and the investment, the objective of the investment is to go public at some point, but in the initial offering period, which can last anywhere between 3 to 5 years is the typical hope, but unfortunately it doesn't work out that way in every case. But in the initial offering period, you can't sell it. And so in those situations, the big difference is, if again, the representation that we often hear is that the broker told me this was a safe investment. The problem is even when you discover that's not the case, there's nothing you can do about it. You can't sell it and you're stuck with it. And so you watch these things ride to the ground. Certainly, like we've seen, from 2008 to forward, we have one of the worst market corrections since the Great Depression. And that impacted all areas of the market, including real estate. And unfortunately, what you had happen with these REITs, non-traded REITs, is that they would reprice over time. And investors, while that might have triggered to them, my goodness, this isn't the safe investment that I thought it was, the reality is there was nothing that you could do. And so we've seen a number of cases involving REITs over the last couple of years. And liquidity is a big component of that. The other thing has to do with, frankly, the risk. While it shouldn't be any riskier than buying just real estate generally, the problem has to do with the way these investments are structured. They're very high commission products. That's what incentivizes financial advisors to sell them. They typically pay between 7 and 10% commission to the broker. There's also due diligence fees that are wrapped in there. And so what happens is on the garden variety non-traded REIT, maybe 15% of your money is taken off the top to pay out professionals, whether it's marketing, the financial advisor, due diligence, etc. And if you're buying a property that's leveraged with a mortgage, and let's say it's typically 80% leveraged, if you take 15% of the remaining equity off the table, you don't have a lot of equity left in it. And so when the market corrects, as it did, what ends up happening is the equity gets sucked away, and many of these non-traded REITs have declined substantially in value. And while this is sort of post-fact from 2008, what we've seen is that these investments continue to be sold. And I don't know what the representations a broker might be making right now would be, but certainly my question, if I was advising an investor, what I would hope they would be asking a financial advisor is, tell me about track record of these investments. Because the reality in my experience with brokerage firms is if it pays a 7 to 10% commission, they're going to find a way to sell it. And they're going to gloss over the risks, and they're going to focus on the pros. And the pros for these investments, just so you know, is generally income. Most of our clients that bought these things are people who were either retired or nearing retirement. They were looking for retirement income, and REITs typically will pay between 6 and 7% interest. That's the draw. And if it plays out, then that's the benefit. And then you potentially have some upside growth if the real estate goes up in value. But unfortunately, what we've seen is that a lot of brokers will overlook the risks and focus on the pros. And then you have people who are buying it who have no idea what they're really buying. And so that's what a REIT is. Obviously, I can't speak as to whether or not it's a good idea or a bad idea for someone to buy one, but the questions would certainly be, what are you getting paid? What is the risk profile? What are the chances that I could lose all this money? And what's interesting about these investments is that it's often buried in that fine print where it says that. But our clients are typically relying on the oral representation of the financial advisor. And even if a prospectus, which is what comes with a REIT, is provided to the client, a lot of times I've heard statements like, "Oh, don't worry about that. That's just legalese. You don't have to worry about that. They're required to say that, but trust me, these investments are safe." And those disclosures are in there for a reason. Certainly, that's information that investors should read. And if there's questions you need to ask your financial advisor, make sure you understand exactly what it's saying. Haley, what's our second question?
The second question is, I bought Boehringer's Harvard 7 years ago. My broker said it would be illiquid for 3 to 5 years, and then I could sell it. What do you think is going on?
Thanks, Haley. That investment is Boehringer Harvard. That's one of the REIT sponsors that we see in a lot of these cases that we've got going on right now. There's others. KBS REIT is another one. The Boehringer Harvard one we see is typically the Opportunity REIT. We also have Heinz REIT cases, Wells REIT cases. These are investment sponsors that sold these investments. But with respect to the direct question, again, the way these things are often sold is the broker will say, okay, you buy it for 3 to 5 years. It's a liquid initially, and then it's going to go public. And in the case of Boehringer Harvard, that hasn't happened. There is a Boehringer Harvard one that's supposedly going public soon, but we'll see what the public market actually thinks of it in terms of its value. But the reason they hold off is because they don't go to market until they think it's actually going to be a good move. So if you bought it at $10 per share, and now it's worth, in the case of at least Boehringer Harvard Opportunity Fund, I think it's worth like $1 or two per share. Obviously, that's a huge decline. You're not going to want to go to market and have this thing get beat up, and so they'll sit on it. And the reality is, and buried again in that fine print, is language that says the sponsor can do that. It's a very unilateral relationship. It's what we call in law school a contract of adhesion, where you sign it and you buy it, and they basically dictate the terms. And they tell you this is how it's going to unravel, but the reality is they can change those terms whenever they want, however they want. And that's what's happened with Boehringer Harvard and a lot of these other REITs, is that they've decided to hold off on going public because, frankly, there's no market for it. And so what you thought was an investment that would go liquid in 3 to 5 years, here we are 7, 8 years after you bought it, and you're still stuck with it, and you can't sell it. And the only place that you can sell it, there are actually secondary markets that have popped up. One of them is lpsales.com. There's another one called CT Auctions. So there is the opportunity to sell those investments, but unfortunately, the only buyers out there are very sophisticated venture capital firms, hedge funds, and they're only going to buy it if they get a sweetheart deal. And so that's a challenge for a lot of our clients. Is they're retired, they need liquidity, and the only way they can get it is to sell it, and it's not gone public yet. So the only place they can sell it is that secondary market, and they're going to get beat up. We can't advise clients on whether or not they should or shouldn't do it, but I do tell clients, you're not going to get full value. You may never get full value. If it never goes public, you may never get full value, but on the secondary market, you're going to get beat up. What's that last question, Haley?
The last question says, I recently bought a non-traded REIT. When I asked my broker about the commission, he said not to worry about it, that I'm paid by the company. Should I be suspicious?
Yeah, I hear that statement all the time, and the answer is yes. You should absolutely be suspicious. These are, like I said, very high commission products, and I do hear that representation all the time. Don't worry, you don't have to pay me. The sponsor pays me. Yes, that's true, but they pay you with your money. If you invest $100 and the commission's 7 to 10%, the sponsor is writing that check, but it's coming off the top. So now instead of investing $100 in real estate, you're really investing $90 in real estate. And again, when you pay that much in commission, it's real hard to outperform the market. And that's part of the reason these are such high risk investments, is the only way for them to perform is to be aggressive, because they've already gone below, your investment's already down 10% just from the start. So those are a few questions on REITs. If you have questions, please visit our website at wallstreetversusmainstreet.com, wallstreetvmainstreet.com. You can also find us on our Twitter page. Send in questions and we'll be happy to answer them. How are we doing on time, Haley?
We've got about 9 minutes left.
In the total show, right?
Yes.
Okay. Can we take a break real quick?
Sure. We're going to go to commercial break?
Yeah.
All right, I'll go right to it then.
How are we doing on?
You know Fujiyama as Vero's favorite Japanese steakhouse, sushi bar, and hibachi grill. Now Fujiyama announces lunch and dinner Asian fusion, Chinese and Thai, with all day, all night, $4 popular cocktails too. Early bird dinners Monday through Friday from 4:30 to 5:45. Kids eat free all day Sundays with a paid adult. Place your order online at FujiyamaVeroBeach.com. Fusion comes to Fujiyama in the Marshalls Plaza, Route 60, Vero Beach.
Hello, I'm Chris Hudman, formerly of Bugmaster, now co-owner of Compass Pest Control. CompassPests.com. Compass provides a complete range of services, including lawn and landscape, termite prevention, and structural pest control for both residential and commercial clients. Find out why friends and neighbors are choosing a new direction and moving to Compass Pest Control. Call Compass at 772-413-1647 or visit CompassPests.com.
Today in business, you truly can't do business without a professional website. That's where Cobalt Creative comes in. Tom Nangle, president of Cobalt Creative, makes sure to take care of your search engine optimization and hosting. Cobalt Creative will also tie in all your important social media needs as well. Call Cobalt Creative today. Get one page on your website absolutely free just by making the call. Call 772-333-0006. Cobalt Creative Company, an iTex trading community member. Your iTex dollars are welcome.
I can't. Nope, I can hear me.
Yeah, I can hear you.
Same. I can hear Nick.
Yep, I got Dax.
Can you hear now?
Yeah.
Go ahead and count to 5 for me, please.
1, 2, 3, 4, 5.
Okay, your mic.
1, 2, 3, 4, 5.
Okay, good. You got it.
Just like NPR, baby.
That's right. That's it. You ready?
Yeah.
Everybody stand by. Here we go.
Welcome back to Wall Street versus Main Street. I'm your host, Dax White. This is an investment show where we try to shine the light on some of the tricks of the brokerage industry and arm investors with some information so that they'll be better equipped to deal with their financial advisor. Each week, I'm going to hit on what I'll just call the topic of the week, something I think is really important that I wish more investors knew about. And this week's, I might do this one every week. That's how important this is. It has to do with what's called FINRA BrokerCheck. FINRA BrokerCheck is an online database where you can go and look up every registered financial advisor. And I wish clients knew about this because it's got all the information that you would want so that you can vet a financial advisor. It gives you how they did on their licensing exams, where they've been employed, if they've declared bankruptcy, there's any liens against them, any criminal charges, have they ever been sued? All this information is critically important when you're deciding who you want to hire as your financial advisor. And it's baffling to me, and it's frankly on FINRA that they don't get this information out there, although they are right now advertising that it is available. But unfortunately, so few investors are aware of it. I can't tell you how many times we get a call on an intake and we first question, who's your broker? And we're on the FINRA website and looking them up, and they tell us, I invested with this person, and we say, is he registered here? Yeah. How'd you know that? Is this his office address? Yeah. How'd you know that? And they think we're like Houdini. Meanwhile, all we're doing is reading off their broker check. It's an online available report. You can get it at finra.org, which is FINRA.org. And again, it's got all the critical information that you would want before you're vetting or before you're hiring a financial advisor. Frankly, if you already have one, you just want to make sure you got the right one. That's where you go. And I think it's critically important for investors and finding a financial advisor. So that's my topic of the week. Now we're going to bring on a guest who's going to give his take on the brokerage industry and sort of how he tangentially deals with it. And his name is Nicholas Bruce. He's a member of the Collins Brown's Trust and Estate Group. His practice is focused on probate and trust administration, probate litigation, tax and estate planning, and business and real estate transactions. Mr. Bruce represents individuals in structuring their estate plans to reduce tax liability and increase asset protection. He also represents individuals and financial institutions with fiduciary administration matters. Nick, thank you for joining us.
Thank you for having me, Dax.
So overview here, you're somebody who deals with some estate planning issues. Certainly you have then some involvement with financial advisors, right?
That's correct. I would say they're one of the critical pieces of an estate plan. They're the people that the clients are probably meeting with the most often, most frequently, that tend to have as much detail about a person's life, financial situation, family situation as anybody else that's involved in making sure this person's affairs are in order.
Sure, and I don't want the tone of this show necessarily to be let's beat up on financial advisors. So I want to disclose, brokerage industry is not unlike any other. There's good ones and there's bad ones. It's just like lawyers. There's good lawyers and there's bad lawyers. So I'm sure, Nick, you deal with great financial advisors, and that is absolutely, if you've got a good one, stay with them. That's critically important. But in terms of the advisors you deal with and the clients that you have, what are you telling clients about the financial advisor? What information do you want them to have when they're dealing with their advisor? The
single most critical piece of information I think that they can have about this financial advisor is their education, their background, what they're doing to stay abreast of the industry. I think they need to listen to what a broker is telling them and listen to it critically. If a broker seems to be pushing some particular product, particular segment, whatever it is, sector, really hard, I think they need to ask questions about that. Clients too often, whether it's the legal side or the financial management side, they tend to not ask enough questions, not get educated enough as to what it is that we're putting in front of them.
Sure. You get a referral, that's your guy.
That's right.
Yeah. We see that as well. And certainly that's a challenge for us because we're typically the first first professional that the people hire after they've been burned by their last one. So, and it's amazing. Now they're asking lots of questions and you're going, I wish you'd asked those questions before, but I see it all the time. Something else we see, Nick, has to do with elderly fraud. And certainly, the big spectrum of our clients are generally retired people, partly because, that they're the ones who need the safest portfolios and maybe get taken advantage of, but also because you have diminished capacity at a certain point. And I would think that would segue into what you're doing in the estate planning part. So what are you trying to have your clients do to help protect them, particularly the elderly clients, in that brokerage relationship?
So certainly every client's different. Every client's family dynamic or family situation is unique. But I think particularly elderly clients need to have someone that they trust implicitly, that they can have look over to their shoulder. Maybe take a second look at the client's estate planning documents. Make sure the will does what they know their elderly parent, grandparent, aunt, uncle, friend, whatever it is, wants to have happen. Same thing on the financial management side. Make sure that someone's reviewing those statements, particularly as you get older or you never had an interest in it. Maybe your husband always took care of it and now you're widowed. Bring someone into this situation, into this scenario that can take a look and help out and make sure that the broker's doing what the broker says they're doing.
Perfect. Thanks, Nick. Any parting shots on and practice tips for people who are thinking about getting some estate planning?
Make sure you have one. Make sure you talk to a lawyer that knows what they're talking about, that does this every day, that can make sure that you have the plan in place, because unfortunately this is one situation where once it's too late, the person's passed away, we can't go back and undo it.
Right. Thanks, Nick. Again, you've been listening to Wall Street versus Main Street. We're going to try to shine the light on the brokerage industry each week, arming people with information that they might think is relevant in that relationship.